Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday. Still hold up in our houses. If you're in California, they're making you. But it's all good. Market Webcast. Okay, so good morning to everybody. I hope everybody's holding up. Whatever your situation is, I hope you're healthy. I hope your family's healthy. Let's take a look at the daily chart. And you can see we've worked our way back inside the bands. You see the 9-day diving to meet price. It's at 25.30. They rallied it overnight as high as 2,500, basically 24.99. That's walking its way back in to the open. So, look, a couple things. You got to see, is this the culmination of a few day choppy little rally off of 22.62? Or are they going to hold here, build on it, and try to challenge that 9-day simple today up there at 25.30? So hourly chart, you can see it there. 25.50 is the key resistance. Those are the areas back Monday, Tuesday they couldn't get over the top of. You see the low there at 22.62. You do have a series of higher lows after that low. It's just a matter of, and you do have a higher high. It's broken above this smaller range that was really 2,300 to 2,450. They're back inside of it. It'll be interesting to see if the hourly mid-band can hold here. We didn't trade last night. We were flat. I made a conscious decision. I didn't want to trade. I just didn't want to trade. I was tired. We had another great day yesterday. We've had a lot of new people in the room, a lot of people coming back, a lot of new people coming in. It's great to see everybody coming in and doing well. So last night I just chilled out. Off the open today, you've got volume weighted average price at 24.21. Hourly mid-band is right around, call it 24.07 basically. And you've got our proprietary moving average up at 24.57. So the roundy to 2400 to 2420 is going to be key off the open. A lot can happen in 45 minutes. We could open up nowhere near there. It could go back down to retest daily pivot here. It could come back up and open more along the lines of this first level resistance. And we'll see where we're at. My same suggestions are that they apply today. Don't take anticipatory trades. Don't anticipatorily buy down candles. Don't anticipatorily short up candles. Let them move. Let them exhaust. Keep an eye on the risk marker. Buy them on the back through. Because if the trade's correct, then that's where it's going to head. And that's what's worked, really well for us. You do the anticipatory, then unless it all of a sudden wants to stop on a dime for you, and in a volatile market like this it has no reason to, then you're going to get run over to the tune of 5, 10, 15, 20 handles. And for us, we use 5-handle disaster stops in any environment. Then we're going to get nicked out of something that we don't need to get nicked out of if we were just a little bit patient. And what we have been finding is we can get a better entry relative to the marker by just letting it exhaust and come back. So respect price, respect risk. See what kind of day it wants to be. If it wants to be a choppy day, we might not do much today. It's been a great 4 days on top of a great month, and we're under no pressure to trade, that's for sure. So we'll see what it wants to give us. All right. Everybody have a fantastic day. Have a fantastic weekend. Those of us here in New Jersey, it's supposed to be 74 degrees today. Get outside, get some fresh air. Enjoy your families, enjoy the weekend. Take care. Trade them well. I'll see everybody Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.